Hello everyone, and a very good afternoon to all. I am Ridul Mishra, and on behalf of Care Ratings welcome you to our live webinar on microfinance, coping with demonetization. Care Ratings sincerely appreciate your time in joining us for this webinar. To take you further on this, may I introduce our speakers for today. We have with us Mrs. Revati Kasture. Mrs. Kasture is the Chief General Manager at Care Ratings and is associated with us for over 15 years. Prior to joining Care Ratings, she was working with the European Bank. She is part of the rating committee of CARE. Teaching is a passion and she has been associated as guest faculty to management colleges besides being a trainer for conducting corporate trainings organized by CARE Ratings. She is an All India Merit Rank holder chartered accountant and cost accountant and has been honored with Professional Achiever Woman Award by the Institute of Chartered Accountants of India. Our second speaker for today is Mr. Anuj Jain. Anuj is working with Care Ratings as Deputy General Manager and has an industry experience of over 10 years. He is part of the ratings team tracking the BFSI sector and is the sector specialist for the banks and NBFC sector. Our third speaker for today is Mr. Ravi Kumar. Ravi is working with Care Ratings as Senior Manager and has an industry experience of over 10 years. He is part of the ratings team tracking the BFSI sector and is the sector specialist for the microfinance sector. The webinar would be in form of a presentation which you can see on the screen. In case of queries, please key in your questions in the slot provided. We'll be having a Q&A session at the end of the presentation. I repeat, for any queries, please key in your questions in the slot provided. We'll be having a Q&A session post the presentation. Now, may I request Mr. Revati Kasture to begin the session.
Good afternoon to all of you all, and welcome to CARE's first webinar on the microfinance sector. CARE has been well entrenched in ratings of MFI companies, and presently we have 46 companies under our rating coverage, with most of the top MFI companies being rated by us. This translates into a 70% share in terms of the book size of MFIs. The MFI sector, as we all know, has seen phenomenal growth with collection efficiencies of near 100% before demonetization hit the space. However, the highest rating for the sector from CARE is in the A category, with A plus being the highest rating and 3 entities with an A plus rating. In terms of rating distribution, we have 10 companies in the A category band, 15 companies in the BBB band. That makes it about 25 companies out of 46 companies in the investment grade category, with the balance 21 companies being in the speculative grade category. We have also been active in the securitization space for MF portfolios and presently have ratings on 30 pools with outstanding amount close to 2,000 crores. Today, I, along with my colleagues Anuj and Ravi, would like to present our perspective on the MFI sector, especially since the trails of the sector post-demonetization, initially affected by a lack of currency and slowly translating into willful defaults. We would also present our take on the expected growth in book size, the book at risk, the ROTA profitability impacts that we perceive for FY18. I now hand over the proceedings to my colleague Ravi Kumar to take it ahead.
Good afternoon to everybody. I'll be basically taking you through the presentation from here on. I'll be basically initially discussing about the MFI growth story, evolution and context. Microfinance, as we all know, that has been an important tool for poverty alleviation and over the years has been achieving the objective of financial inclusion. Now this microfinance movement was initiated by NABARD in collaboration with banks and NGOs in 1992. The sector slowly evolved from there on with private sector participation, leading to formation of MFIs. The MFIs accessed bulk funds from banks and did on lending to the end borrowers. mainly known as SAG members or joint liability members. The microfinance activities thereon were being implemented through two channels, including the MFI model and the SAG bank linkage model. The sector has seen robust growth over the years and has faced various challenges, but has been able to successfully cater to the lower strata of the society, which was earlier dependent on money lenders. Looking at this important role being played by MFIs in the financial inclusion space, RBI has always been supporting the sector as the regulator with continuation of PSL benefits for onward lending, and also chosen the MFIs for conversion into small finance banks, wherein 8 out of 10 licenses have been awarded to the MFIs. I will be taking you through the broadly three phases. We have divided the sector which has undergone into three broad phases. One is the phase up to 2010, which was high growth and transformation phase. The second phase is 2010 to 2013, that was with high volatility and consolidation in operations. And the third phase was 2013 to 2017, wherein the growth resumed and there was a transformation, and but at the end, in the last leg, it encountered high volatility. Firstly, I will talk about the phase 1. The phase 1 witnessed very high growth in the sector, wherein there was a transformation phase with entities moving from not for profit basis, that is NGOs, who moved on to not for profit basis NBFCs, for them to enable to increase the scale of operations at faster pace, and were backed by increased funding from debt and equity investments, mainly from the private equity investors. During this period, the loan portfolio grew at a rapid pace, but there was concentration of portfolio to certain geographies. The lending practices followed by the MFIs were also very divergent and were not under any common regulatory framework. The sector was also on a continuous basis impacted on a smaller scale by political, social and regulatory interventions, but they were more of a localized event risks. Phase Phase 2 started with AP crisis, leading to sharp deterioration in collection efficiency and asset quality of MFIs due to geographical concentration. Now, the next two slides will give you a pictorial image of the changes in the gross loan portfolio, number of employees, branches and clients in phase 2 and phase 3, which we are discussing in a sequential manner. So before I explain you about the AP crisis, we can see the parameter in this chart which were adversely affected during 11 to 13, the phase 2, wherein the gross loan portfolio fell from almost 50,000 crores to 30 odd thousand crores, and corresponding fall in number of clients, branches and employees. Now to take you forward to explain the AP, what happened during the AP crisis, um, which was more accentuated by the lending high lending to these geographies, including Andhra Pradesh, which due to high competition and aggressive lending. In October 2010, the AP state government implemented an ordinance to regulate the MFIs on the concerns that MFIs were charging higher interest rates, using coercive recovery practices and multiple lending, leading to higher over-indebtedness among the borrowers. The AP ordinance required that the MFIs operating in the state had to register with local district authorities, and on account of which the MFIs had to put hold on the collections and disbursement. Realignment of the process and extension in timelines for getting approval from the state government led to deterioration asset quality of MFIs having exposure in AP as the operations were stalled. This resulted in sharp deterioration in asset quality of AP-based MFIs, with recovery going down to 10 to 15% from 99%, which is visible in the slide, wherein almost the collection efficiencies from 0%, the efficiencies decreased to 60%. However, in the non-AP phase, the asset quality was not affected. There was some aggravation, but then it was within the sub 1 levels. Overall, this crisis led to a impact on the entire microfinance sector, wherein it led to funding constraints due to regulatory uncertainty. The regulatory uncertainty, the regulatory uncertainty was high on account of occurrence of similar events in other states as well. So even though the impact of AP ordinance was not evident in other states, the MFIs continued to have gross NPAs below 1%, which is visible in the slide. Now in the phase 2, the RBI formed a committee in November 2010, wherein the guidelines were implemented to regulate MFIs and were brought under the ambit of NBFC MFIs. The later phase was marked by consolidation in operations and lending practices to comply with the new guidelines, as well as improve operational efficiencies and to follow fair lending practices. Now, if you look at this slide, which is there, it is clearly visible the MFIs made efforts to improve their operational efficiencies by improving their employee efficiencies and average loan per borrower. Now the last phase, that is the phase 3, which was more of post-consolidation phase, there were signs of growth with fresh infusions from the equity investors as well as from the debt market. The phase was characterized by more stable regulatory environment. When I say more stable regulatory environment, the RBI guidelines were there for regulating NBFC MFIs. Plus, there was a support from the RBI in terms of a one-time waiver to banks for restructuring loans given to MFIs. And accordingly, unsecured loans restructured before 2011 to be treated as standard assets. This was aimed to provide liquidity support and continuity in operations till the implementation of final guidelines by RBI. The RBI also retained the priority sector lending classifications, and also there was also fresh infusion of funds from the private equity investors. This phase was also marked by increase in the role of credit bureau and self-regulatory bodies, wherein they had implemented they had formed an association, MFIN and Sadhan, to create a self-regulatory body, and there was and this phase again witnessed a high growth because of the support from the equity and the debt funds being there. But again, the last leg was impacted by the demonetization, which led to fall in collection efficiencies starting from November 2016. Now, if you look at this comparison in this chart, which clearly shows how the MFIs which were there in the 2012, that if you look at the top 10 MFIs were replaced by next top 10 MFIs because some of them had to shut their operations on account of their concentration in AP. So if you look at specifically at Spandana, Share and Asmita, which had exposure to AP, had actually went into CDR, whereas other MFIs grew very strongly on the back of funding support as well as being not present in AP. If you look at Bandhan, if you look at SKS had a share of exposure in AP, but then still it was able to recover on account of equity infusion they had in that period of time. From there on, all the MFIs have been able to grow year on year, and the 2017 it's clearly evident what kind of growth they have achieved. The next phase, what we witnessed is during this phase only, 2013 to 17, there was again a transformation. Earlier transformation was from NGOs to NBFCs. Now this transformation was from NBFC MFIs to SFBs. So wherein, so this basically provided an opportunity So if you look at the overall microfinance activity, the definition of microfinance, it says it's basically to provide provision of thrift, credit and other financial services and products to the unbanked population. But however, in the initial stages of microfinance activity, given the legal form of society trusts and subsequently NBFCs, there were restrictions on providing many financial services, and thus they focused mainly on the microcredit activities rather than microfinance activities. Now, this window of opportunity to actually cater and provide financial services were provided by RBI by setting up guidelines for small finance banks. So RBI gave in approval for to 10 entities, of which 8 were MFIs. So thus RBI was very clear in terms of in terms of its agenda for achieving the objective of financial inclusion. So if you look at the list, what has been actually given, sort of them 8 were NBFC MFIs. However, there are challenges and advantages of operating as SFBs for the NBFC MFIs. SFBs definitely have an opportunity in terms of catering to the retail segment who have graduated from MFIs. For example, the loan limit is 1 lakhs for which MFIs can cater to. Beyond that, the SFBs can tap in, which are not generally accessed by banks. So 1 to 3 lakhs or 10 lakhs, wherein the banks also do not participate. This is the space which SFBs be able to tap. Plus, apart from this, SFBs can also offer other lending products. Apart from the microcredit, it could involve housing loans, it could involve other types of loans, which may help them to also diversify their portfolio. Third part is also again the based on this diversification in the lending products and the products being provided, they will also be able to diversify the revenue base by offering savings, remittance, insurance, and other services. The other advantage what the NBFC MFIs have in terms of operating as FBs is access to the low cost deposits. But this is not an easy task for them. They have certain challenges which the NBFC MFIs need to face. That is, one is so they have been operating on one single segment, that is the microfinance segment, microcredit segment. So the experience of lending to other asset classes will be a challenge to them. Profitability will also be a concern on account of conversion to SFBs, because there will be a lot of operational expenses which will increase during the initial phases to set up branches, to hire people. So that will again likely to decrease their profitability. And third one is on in terms of tapping the deposit base. So the entire funding would now shift from the bank funding to the tapping the deposit base, which will again be a highly challenging job. We have looked at this performance of K-rated entities during the phase of 2014 till date, till 9-month FY17, that is just prior to the demonetization phase. The sector has been witnessing tremendous growth. If you look at the ROTA, which has been again improving from 4% to almost touching 5%, on the back of decreasing yields, this has been able they have been able to do it mainly on account of controlling their operating expenses, which have declined from almost 12% to now sub 8%. So the growth what we have witnessed post the consolidation phase is clearly visible, with loan portfolios growing and also the income corresponding to that being increased with the control in operating expenses. Only thing has been since their growth has been very high, the capital adequacy in spite of equity funding has been on a declining trend, even though it's still now healthy at 22%. I'll request my colleague Anuj to take on from here on and go on that inform about the impact of demonetization.
Good afternoon, friends. Now I will take you through the asset quality trends post demonetization with focus on geographical trends. Event risk continues to be a major risk in case of MFI sector, and time and again the sector has witnessed event risk, including the current demonetization. Political risks such as loan waiver, regulatory risk uh, in case of Krishna district and AP ordinance, uh, again religious issues in case of Kolar district cases, and then natural disasters. So all of these have time and again impacted the MFI industry. In these cases, large percentage of the borrowers have not paid their installments, leading to the sharp spike in defaults and sharp drop in collection efficiencies of MFIs. During such instances, collection efficiency sharply decreases to even nil collections from a high of 99% during the normal period. Since the borrowers in a particular geography tend to follow each other, irrespective of their ability to pay or not to pay. Hence, MFI portfolio is susceptible to correlated shocks and vulnerable to such kind of losses in event risk. The impact of demonetization has also been similar in terms of drop in collection efficiency. The collection efficiency has sharply dropped from a level of 99% to even 40 to 75% in certain geographies. However, in the graph which is there in front of you, we have shown cumulative collection efficiency of a sample which roughly represents 50% of the market. So from a high of 99% prior to demonetization phase, it has dropped to 89% in the November month, and then it has continued at similar level till January, and there was a marginal improvement in case in February and March. So largely the availability of cash had smoothened by February. However, due to issues in various pockets related to local issues, the collection efficiencies continued to remain low at 91%, and it has not improved in spite of the availability of cash. Now, broadly, there were six states where the issue has been there. So, in terms of these states, there's been Uttar Pradesh, Karnataka, Haryana, Madhya Pradesh, Uttarakhand, and Maharashtra. So, out of these all six states, if we see Uttarakhand and Uttar Pradesh herein, while December after December, there's been continuous improvement in the collection efficiency. So, in spite of the elections being there, post completion of election in case of Uttarakhand and both Uttar Pradesh, the collection efficiency has steadily improved. However, there have been some states wherein post the impact of demonetization is gone, the collection efficiencies have actually dropped. So in case of Karnataka, Maharashtra, Madhya Pradesh, all these three states, they've seen drop in collection efficiency. Now, within these states, there have been certain districts because of which there have been issues in the overall collection efficiency of these states. So now we have represented in the basically wherein states like Maharashtra has got issue in Amravati and Wardha, wherein in November the collection efficiency, wherein the availability of cash was at the lowest level. On that point in time, it was in the range of 60 to 80 in case of Amravati and 80 to 100% in case of Wardha. However, by March, it dropped to 20 to 40% in case of Amravati, and in case of Wardha, it dropped to 40 to 60%. Again, in Madhya Pradesh, Sagar has been a largely affected district, wherein it has dropped from 60 to 80% to 40 to 60%. Some of the other places where it has got impacted has been Uttar Pradesh. So in UP, Bulandshahr has been a district wherein while there's been some improvement, however, it still continues to be low between 40 to 60% collection efficiency. In case of Karnataka, Dharwad has been a pocket wherein the collection efficiency have dropped after demonetization. So in November it was still between 80 to 100%. However, by March it dropped to 60 to 80%. Again, in case of Maharashtra, certain pockets in Nagpur, Yavatmal, there again basically collection efficiency has dropped, including Akola. In case of Uttarakhand, largely the collection efficiency remains same, so it was between 60 to 80% in November, and by March also it continued to remain same. So there has not been any improvement, while there has not been any deterioration as well. In case of Uttar Pradesh, there have been a few more districts where there was an issue. So Bijnor, Mathura, Bareilly, Amroha, all these three districts, while they were at a low of 40 to 60%, they have improved to 60 to 80%. So while there has been improvement, but still there is a long way to reach to a normal level. Again, in case of Amroha, Aligarh, Devariya and Kushinagar, so there have been some improvement. In case of Devariya and Kushinagar, there's been a major improvement, so they have improved quite a lot from there on. Now we'll see the district-wise collection trend and how situation has improved in these districts. So basically, there were 9 districts in which collection efficiency was less than 40% in the month of November. Now, if we look at the March collection efficiency from 9, less than 40% is just in one district. So rest of the other districts have improved. However, it still continues to be low. So in 5 districts, it is still between 40 to 60%, and in 2 districts, it is between 60 to 80. So it has still not reached a comfortable level of more than 90%. There were 18 districts which were between 40 to 60%, and therein again there have been some improvements. So there are only 4 districts out of 18 which are still in 40 to 60% collection efficiency, and there have been some movement in 13 districts wherein they have reached to 60 to 80% collection efficiency, and one district has reached into 80 to 90%. Again, herein there is a long way to go, because there's no district out of these 18 districts which have moved into more than 90% category. Then in 60 to 80% collection efficiency, there were 55 districts, and out of that there are 4 districts which have actually deteriorated. So 3 have moved to 40 to 60% collection efficiency, and 1 has moved to less than 40% collection efficiency, while 17 have remained thereon, and balance 34 have improved. And out of that also 13 districts are there where they are close to normal, while there is some way further to go, but they are more than 90%. In case of 87 districts, the collection efficiency even in the month of November was between 80 to 90%. However, subsequently there have been 13 districts out of this 87 districts wherein the collection efficiency reduced, and it reached a low of 60 to 80%, and there were 2 districts wherein there was a major problem, and that's how it has gone between 40 to 60%. And there have been improvement in 55 districts out of these 87 districts wherein collection efficiency have moved more than 90%. Now there were 304 districts wherein in November also the collection efficiency was was more than 90%. So out of those 304 districts, if you see the March figures, then more than 90% collection efficiency is there in 270 districts. While this is a comforting factor, the other side of the story is that there were 34 districts which have actually fallen in March. So the issue is not related to the demonetization. If we see this chart, there have been issues after the yeah. So out of total 473 districts, now in March there are 338 districts wherein the collection efficiency is more than 90%. So rest of the districts are there wherein it is yet to reach normal stage. Now, CARE basically has got 30 securitized pools. So, in case of securitized pools, also the collection efficiency had dipped to 90%. Then it improved to in December month, and then once again due to issues in various pockets in those 6 states, it has once again fallen to 90%. So there was a improvement in between, but however it has once again gone down. Now we'll like to cover the credit perspective. While all entities have got impacted during the current turmoil, however, the degree of impact varies from player to player. So MFIs with a better geographical diversification, credit discipline, and lower gearing are relatively better placed from a credit perspective. Again, MFIs with high rural penetration have been relatively less impacted because of the sheer diversification that offers. From a credit perspective, geographical concentration as a proportion of net worth has always been a key indicator to see an entity's ability to absorb such shocks. Thus, MFIs with lower state or district concentration as a proportion of net worth are better placed to absorb these kind of risks. As in case of any financial institution, very high growth can lead to asset quality troubles subsequently. While for entire sector, last few years have been of high growth. Within that also, some players have extremely high growth and thus are more vulnerable. MFIs with high penetration in densely populated pockets are impacted more. Since if some densely populated pocket gets impacted, it can have a severe impact on the overall book. MFIs with lower average ticket size and high collection frequencies have fared better since the population being catered is at the bottom of the pyramid with not much surplus, and whatever need comes first, the money gets diverted there. While the sector is prone to these kind of risks, our suggestion would be that to handle such situations, balance sheet of MFIs need to be much stronger as compared to a normal NBFC. Thus, there is a need to create capital conservation buffer during good times out of the profit. Capital conservation buffer would again be different for different MFIs based on their own expected magnitude of loss for the extreme event, depending on their level of geographical concentration and level of leverage. Now we would like to cover the outlook for the sector. Uh, the sector would be requiring a close watch as the impacted geographies are yet to see meaningful improvement. Further, in cases where people have not paid all due installments, there will be back-ended recovery wherein the tenure of loan itself would increase. CARE expects an annual growth of 25 to 30% in the MFI loan portfolio, which would be dependent on early normalization of situation in the affected regions and could be lower in case the situation prolongs. We feel that different players are likely to take a hit in the range of 5 to 10% of their portfolio as a result of the current event. Thus, few players might also require equity infusion to absorb the current impact. Given the current situation, CARE expects severe impact on the profitability during FY18 for the MFIs. With this, we now come to the end of the presentation.
Thank you, Anuj. Dear participants, now we will be taking a break of 2 minutes before we come back to take your queries. You are requested to start keying in the questions in the slot provided. I repeat, we are taking a break of 2 minutes before we come back to take our Q&A session. Thank you. Hi friends, now we'll begin our Q&A session. The first query is coming from Mr. Rahul Kotabe. He's asking, is Amaravati collection efficiency at 20 to 40% as the MFI industry trend shows more lower collections efficiency?
Hi Rahul, thanks for your question. Basically, there will be various players who would be having different collection efficiency in the Amravati district. However, our computation is based on a sample which covers 50% of the industry. So again, while answering your question, there will be players who might be having a lower collection efficiency than 20 to 40% as depicted by us.
We have a query from Mrs. Harshita Kothari. She's asking, could you please give a detailed explanation on the app crisis? Ravi would like to take this query.
Yeah, hi Harshita. So what has happened during the AP crisis is initially, so in the initial phase, uh, all the MFIs were concentrating in the AP region. So post this, there was a high growth in these regions, and there were some reports on over indebtedness and suicides among the farmers and the borrowers, which led to the AP government forming an AP ordinance wherein they stated that whatever MFIs are operating in this state have to register, and then they can start their lending operations. So that phase, the realignment process, wherein it took some time for the MFIs to register and realign their processes to follow the AP ordinance, that phase led to sharp deterioration in the asset quality, and which post that also they were not able to recover that money.
Mr. Navneet Sinha, he's asking, some parts of Karnataka, Tamil Nadu are also said to be affected. Can you please throw some light on the current situation in these states?
Hi Navneet, thanks for your question. See, basically, as far as Karnataka is concerned, in the northern districts of Karnataka, there is a problem, and many players are impacted there. However, in case of Tamil Nadu, it's not a widespread problem. So what we learn is the particular player who has been facing issue in case of Tamil Nadu, and it's not a widespread problem across all the players.
The next query is from Mr. Pratik Burat. He's asking, is the worst now behind for the MFIs and collection efficiencies will only improve from here on, or the industry is still in for more shocks in terms of asset quality over the near term?
Uh, Hi Pratik, with regard to your question, see in the data we have shown basically, collection efficiency has not shown much improvement post February onwards. and that's also related to various pockets where have been there've been issues. So is the worst over? Not so. I mean, we need to closely watch the situation, how in those troubled geography, the collection efficiency going forward pans out. So in the month of April, May and June in the next quarter. So that would depend on that. And besides that, otherwise also MFI has always been prone to event risk based shocks. So, going forward also, there could be many events in select pockets which can impact MFI industry. And that's how, we had given suggestion regarding, basically balance sheet of MFIs needs to be much stronger as compared to a normal NBFC to take care of those kind of shocks. And thanks.
We have a query from Mr. Atul Gupta is asking, is there any permanent change in the industry profitability structure due to government intervention by the way of waiving loans, and is such impact more for the MFI in the comparison to the banks?
Hi Atul. See, event-based rates are always, at a point in time. So again, whatever happens during the current event also, it's a kind of one-time loss which has to be taken care by all the MFI. So in the near term, obviously, profitably gets impacted because of the losses on account of the current crisis. However, going forward also, every few years in certain pockets there have been event risks. So on a steady state basis, microfinance profitability has to kind of capture that. Thanks.
The next query is coming from the line of Mr. Nishant Rungta is asking, what have been the number of downgrades by care ratings in the MFI segment in the last 3 months, and have there been any downgrades from investment grade to specific grade?
Hi Nishant. So in terms of downgrade, so far we have downgraded two entities, and out of that, one from investment grade to speculative grade.
Next query is from the line of Mr. Navneet Sinha. Is asking any view on write-off risk arising out of increasing delinquency, and are there any significant top-up loans by MFIs to support credit quality?
Hi Navneet. See, basically, we have already given the guidance in terms of write-off arising out of the event. So the uh, write-off could be between 5% to 10% of the portfolio for various players, depending upon how much exposure they have to the affected geographies. And with respect to your second question regarding the top-up loans by MFI to support credit quality, I mean, that's not a general norm, so there could be few and far some players who might be doing that, but as an industry overall, I would believe that that's not happening.
The next query is from the line of Mr. Sankar Narayan. Is asking, will the people move from microfinancing company to private money lenders in the wake of push of digital transaction, especially in the rural areas where connectivity is poor and the required skill for digital transaction is poor too?
Hi Shankar Narayan. See, basically, we don't see because of the digital push, people moving from MFIs to private money lenders. Because as of now, uh, because of the digital push, the disbursement are being done through bank accounts and not the collections. So, in terms of collection, the borrowers are getting the advantage of depositing in cash. So, I don't see, it impacting. Yeah, and plus eight SFB, eight MFIs have got converted into SFBs. So therein again they can offer the entire gamut of banking services, right from opening their account to taking cash collection and immediately crediting it to their account and then making use of that money for repayment also. Further, they could be, I mean, transferred to money lenders only in pockets where, there have been willful defaults to MFIs, and if that doesn't get recovered and MFIs may shy away from those pockets, I mean, to that extent, there could be a transfer from MFIs to private money lenders. Otherwise, on an overall basis, it has worked as a good system for the marginal borrowers.
The next query is from the line of Mr. Vinesha. Is asking why same month collection efficiency is still low, 90% for most of the MFIs, SBF and MFIs.
Hi, Vinay. See, basically, when we were talking about monthly collection efficiency, that was a cumulative number and not individual months number. So that's how it was overall collection efficiency. Yeah. So for same month, it could be over 100% in certain geographies because they've recovered money for the past months.
Thank you very much for your participation. There are certain specific queries in terms of certain specific states and percentages of delinquencies in those states and PAR 90 data or total net worth data. We are actually shortly releasing an article on the impact of demonetization and giving a perspective on the entire MFI sector as it stands today and going ahead. So we would send that article to all the participants who have logged in for this webinar, and if there are any queries further to that, we'll be happy to answer them. Thank you so much.
Thank you friends for all the participation and taking your time out for being a part of this Care Ratings webinar. We hope the discussion was insightful and look forward to your participation in future also. For any further queries, feedback, suggestions, you're most welcome to write to us at corp.com@careratings.com. The feedback box would be appearing to you shortly after the webinar. Goodbye for now.